All right, cool. So what were we talking about on Wednesday? Right, we were pretty much speaking with the potential um, small probability of essentially seeing these bullish breaks of structures as a type of optimism, but the only issue with trying to assume that this is optimism is disregarding the fact that what we talked about, right? Something that a very key thing that I've seen with a bunch of people is pretty much acknowledging bullish break of structures in a very bearish market and seeing them as optimism and not as pullback initiations, right? So these bullish breaks of structures were needed to give a pullback, right? To come back to fill inefficiency. We've talked about this before. Came back for mitigation, right? After the mitigation, reaction, break of structure. Right, after the mitigation here, right, we created a break of structure there, right? Meaning that this has now shown an unwillingness to continue higher, right? Signifying not only order flow is to one direction, but structure has now shifted back into the original, I guess, position, because after this reaction, we see a very clear break of structure here. Right, so now we know structure-wise, this is our point of invalidation, right? Unless we start to fail to break this previous low and create, a type of mitigation, a type of break of structure on a smaller time frame, or anything like that to induce us to want to continue higher, right? So we did get the reaction, I believe we got the reaction, a very minor intraday reaction. I believe EU, you could see it better. But we got the reaction here, right? Scalping break of structures here and here. Well, this would be minor intraday, but this would be a scalping structure, break of structure, right? But that was pretty much necessary, right, to create the overall pullback, right? This could be a relative equilibrium just to achieve a premium, right? And then from there, all we're doing is continuing lower, right? So something we pointed out, right, on EURUSD, which is something similar that happened back in March. Is that once price showed pretty much a willingness to go somewhere, right? Because prior to this moment, right, we were pretty much inside of this range that isn't even a new structural range, because we just came from a pretty much a very extreme downside move, right? But even though we came from an extreme move, we already showed the unwillingness here. We then showed the unwillingness here, right? We then took out previous liquidity, but still showed an unwillingness to kill this high. So we need a type of structural move to give us a directional bias, which was here, right? So this induced us to believe in a bullish bias. All we did was mitigate the mitigation, right? And then created a bullish market. So the same thing could easily happen here, right? Because we pointed out the same thing, I believe H2. Right about here. It was after the election, pretty much the election move here, right? So we essentially got a liquidity grab, right? Just a quick grab and reacted immediately to the upside, right? I believe it even took out this low. Yep. And from there, we created a very clear higher high, right? Meaning that any pullback, right, which then could lead to a type of intraday break of structure, is enough of an inducement to want you to continue this bullish bias, right? So we've already talked about this and this, right, which led to that intraday break of structure, right, created a move higher, took this structure out, went up higher, right? But now because this leg took out structure up into here, this is now one full leg, right? So even though we had this move happen here, right, as shown in the markup, all it is essentially a liquidity grab or a reach of discount to then continue higher, right? Because that's exactly what's happened, right? But we're now at a crucial point here. Right, you see this long wick here, right? And that's literally what we're approaching right now. Should probably get there. I mean, we're still in the overall POI because this is your inefficiency fail, and this is your essentially your last push before bearish move. But just due to how extreme this is, right? I don't necessarily see this doing much, right? It really wouldn't make sense for me to see this completely die off after this, right? It could, and the only reason that could happen is as we said before, leg here, liquidity here, and then all this could be is a retracement to continue lower. But that isn't realistic to me, right? And a big reason why is this, right? Because if we're looking at structure here, right, we talked about this before, right? We've already created this leg down. We created the correction, right, to here, didn't break structure, right? Then did not break a previous low here, mitigated, right? Gave a reaction and then took the liquidity and then reacted, showing that pretty much the bearish move is not valid. Why? Because we've taken the liquidity after we've mitigated. What other reason do we have now to want to touch these lows, right? You don't really have one. So after this, right, we then led to that break of structure that we were talking about, gave a strong bullish bias, right? I believe we achieved an equilibrium here, which is currently playing out. How isn't the top one what? You could say that's a liquidity grab to this. You could say it's a liquidity grab to that, but it's not a liquidity grab here, right? Because price stalled. Price stalled before reacting. This just grabbed it. Look at the time frame. The reaction here. Okay, cool. So what's your definition of a liquidity grab? What is your definition? Not the one I've given you, the one that you go by. Candle close below. And what did we speak on when talking about candle closures? Decent reaction. What does that mean? Okay, and what did we speak on in regards to candle closures? Oh shit, my bad. No idea. Who here knows what we were talking about with that? You weren't paying attention. I think we spoke about this 2 weeks ago. Does anybody remember what we said about candle closures with liquidity grabs? No, we didn't talk about wicks. No, what did we say? What did we say about candle closures? I remember exactly saying it. Oh, you guys are listening.
If I remember clearly, you were saying even though even though if there's a candle closure beneath the previous structure, essentially liquidity grab is a quick reaction that leads to a structure break to the upper side. Even though if you did have a candle closure on the lower time frames, you have to take the higher time frame into consideration in terms of it having a quick reaction and breaking structure.
But what did we say about candle closures? Once I say it, I know you guys are going to remember. I remember specifically saying it. Somebody told me about the rules at the end of a Zoom. Or was it actually during the part of the Zoom that I didn't record? I don't remember. All we said was, right, candle closure subjective to time frame. Candle closure subjective to time frame. Right, it's not, essentially it didn't close on this time frame, but it did on this one. So which one do you go by? Right, can anybody answer that? No, you don't. I don't go by either, bro. I don't go by either because that's not a rule for me for liquidity grab. But see, you guys aren't listening. Hold on, let me go back. Why is it that in this time frame, right, we haven't gotten that full, that pretty much that reaction and close below previous structure, but we didn't do that here? Why? Because I think that rule is stupid. Because it doesn't make sense. Right, and you can say go for the higher time frame, right, but then that becomes subjective to scenario. Right, you can easily have two closures like this here, but it could still be a liquidity grab, right, because of the reaction. Right, but let's talk about that though. Technically, during this time, yeah, that would be considered a liquidity grab. And it actually induced a bearish bias for a bit. Why? Because that broke structure, liquidity grab, right? This broke structure, which was necessary for the pullback, right? But keep in mind this move too. We'll come back to this move. Right, so if this is a liquidity grab, in order for structure to continue, you have to take this out. Right, we then get breaks of structure, breaks of structure, breaks of structure, corrective movement, unwillingness here, which mitigated here, right? Then intraday breaks of structure and continuation, right? So technically the liquidity grab induced this entire move to the downside, right? But then here is the catalyst that essentially created a bullish bias based on that liquidity grab. Obviously, you know that we've been playing this because of our 2-week candle, or 2-week move. Right, 50% of here. That's what we've been playing this whole time. Right, this move happened. Right, but remember, we're trying to play off the narrative of this. So I'm just looking for excuses to risk. there. And that's the advantage of pretty much knowing your higher time frame direction. Right, because I do remember this back in May. So this liquidity pretty much created a bearish bias, right? But because we know of our higher time frame, did we reach here? No, it was around somewhere here, right? Because we know where our bias is, we know where order flow must go in order for that bias to be achieved, right? So even though this reaction is still on a bearish intraday, right? This reaction has shown the unwillingness to continue lower because of where it reacted from. So even though we have corrective structure, right? The corrective structure did not hold because it mitigated the mitigation. Right, so sorry. So even though, right, you can say it's a liquidity grab, you can say it's a structure break, right? It's a structure break now because of what's already happened. But at the time, it is a liquidity grab, but we know where the directional bias is. Right, does that make sense? Harris, does that make sense? Cool, cool. Let's see. And EG was the other one. Okay, so we pointed out one main point here. Oops. That was here. This was our point of invalidation, right? Meaning, right, I wouldn't have wanted price to break this point, or else we're now in a bullish bias, right? Which is exactly what happened. Why? Because from a structure point, right, you could say you have break of structure here. Right, this was the leg that had just occurred while we were on Zoom. Right, so I believe we were around here. Yeah. So immediately after that, right, my reference point was actually here. Right, and I was waiting to see what would happen during London so I could then try to catch continuation in the morning. Right, so as soon as I see, right, that we wanted to react here, let's actually zoom in there. As soon as we see this here, the reaction occurred, right, but it didn't hold. It immediately then broke the POI, right, and then mitigated that pretty much liquidity grab of the POI to then give a bearish move to the downside, right? But you could say potentially there's an SC in that wick because this wick reached, right? Actually even took out the, no, actually left equal lows. Right, but still there was a push down here, right, to then cause this leg up. So that came back, right, then mitigated. Previous wick, right, then created a higher high, right? So this is now a new structural range to play in, right? Because this is our point of invalidation from an intraday perspective. Right, so now that that's been broken, this is now showing pretty much an enticement to want to go higher. Right, so what happens from there? After this higher high was created, right, the same thing happened here. We come into a range. Come into a range, right, immediately after this mitigation. Right, and what is it that we see? Right, you could say unwillingness here. That leads to break of structure here. Right, pullback. Right, liquidity grab on new lows, but since we're in an intraday time frame, I still would consider that a structure break lower. Right, so the reaction was here. Right, but I'm gonna leave that there. Right, but we have this occurring here. Right, so after the reaction, we do not see a willingness to continue lower. So we now have a pretty much a minor intraday, consider that a scalping structure break, right? But this leg has still held itself. Still held itself. Right? So because we've seen this though, we can now reference the extreme here, essentially, right? But this is a structure break, and even if you start reacting from here, you can easily have a target here. Why? Because of this structural range. Because we've already had the move show itself. We're just looking for an excuse to risk because we can't just enter, right? So after this, pretty much this orange unwillingness to continue higher, pretty much a liquidity grab, I mean a mitigation of this wick here, if you guys can see it. Came back into the extreme here, which was pretty much pretty deep retracement. Not too deep, I say around 80%-ish, right? But we do see, right, this wick here take out about three different wicks. Those are taken out, mitigated, right? Scalping structure break, right? Return to discount, right? Move higher here, right? So even though there is no closures, notice there's 1, 2, 3 reactions, right? And that is signaling to me weak bearish order flow because it's taking too many mitigations to want to create a new leg, right? So this is now essentially one leg up, right? And this is one leg up. Why? Because of different structural levels. This could be minor intraday, this could be scalp. And then from there, all we did was once again reach a mitigation point, then another mitigation point to then continue higher. But remember, this original bias was dictated from this new structural range that created a new higher high that took out our point of invalidation, right? So hopefully this wasn't too confusing. Oops, sorry. Hopefully that wasn't too confusing, right? But the move makes sense, right? So from there, right, this sequence could be, it's very similar to what happened with EU, right? This looks like that H4 that we just talked about, right? And then from there, we have another break of structure here, and another continuation here. Right, we're in the bullish bias. Right, let's note that. Right, bullish bias. Lower high, higher high, liquidity grab, higher high, right? Depending on your time frame, I guess. Right, depending on what perspective you're looking at. Came back, tapped here, or well, pretty much took this liquidity, right? Unwillingness. Right, gonna change color. Unwillingness, break of structure here, right? But from there, right, we're still overall bullish, so we would not want to sell here unless there is a key POI to the left, right? So from there, we break our previous high, signaling that there is no bearish order flow wanting this to continue higher because we broke, right, pretty much this SC here, right? We then come back. Did this take liquidity? Yes, it did. All right, we then take liquidity on this side. Right, make a pullback, unwillingness, higher high, which means we're back to bullish structure, pullback, and then there was your New York move, right? So I'm talking to you about this, but that doesn't mean it's fully tradable, right? Because I was looking at this, but it was, to be honest, it was way too messy for me to want to get in. Why? Because the risk is too high, and not necessarily due to monetary or due to anything like that. It's more so because of the scenario. If the scenario isn't high probable to what I wanted to do, then in reality, it doesn't make sense for me to want to take it, right? Because since you're fully bullish, right, this was essentially the enticement that wanted you to believe in a bullish bias, even though we then took liquidity, right? A pullback, mitigation, right? But then this happened, the unwillingness, scalp structure break, mitigation, full breakthrough, right? So in that inducement, full structure break, right? Return to not even equilibrium, so this isn't too tradable either. And then we continue higher. Right, so I hope that makes sense. Right, it's always about looking for a reason to risk. If you don't have a reason to risk, then in essence, you're essentially guessing. Oops. Sorry about that. Right, you never want to guess. Never want to guess. Do you guys have any questions?
Yeah, bro, I got a question.
What's up?
It might be a stupid question, but like when you see a breaker structure, like for example support, right? You see that as a sign of weakness. But when you see like a liquidity grab, like you know, just like it pokes down liquidity, grabs liquidity, do you see that as a sign of strength if it like reacts back up? I don't know if that makes sense or not.
You'd have to show me an example. But I mean, do you mean in trying to continue trend?
I mean, yeah, like for example, like if you see price break structure and it goes above the high and it just plays up, you see that as a breaker structure, so it's a sign of strength. But if you see like a liquidity grab and then you see the reaction down, would you be like, all right, I see that as a like sign of weakness or a sign of strength, or would you just like not see it as anything?
Well, it depends, bro. It depends on scenario. That's why I kind of like to. I don't like to go off of what ifs. I like to go off of you showing me like an example. But liquidity grabs, even if, let's say for example, you have a bullish market and you have a bullish liquidity grab, right? Unless that bullish liquidity grab, right, which is just a wick up and then wick down, right? If that does not break full structure, then that is not enough to then induce a bearish bias. Does that make sense?
Yeah.
Right? At the end of the day, it's all about structure. And then also it's around the volume revolving liquidity grabs. That's not something I've talked about too much. But that's more so for you guys to figure that out. And it's pretty much looking at the volume inside of liquidity grabs. There's pretty much two things that can happen. Well, three, right? It could be one where nothing happens. It's volume does not support it whatsoever. There's high volume, meaning something could have been mitigated or something was trying to get mitigated. Or there's low volume, meaning there's an unsupported move.
Does a time of the day come into that as well?
I mean, yeah. I mean, you won't see that stuff, and you won't see those volume activities during Asian sessions. You know, you might, but they might be slight.
And what about your invalidation point? Like if it
That's
like,
pretty much the structure points.
Okay. So like, but if you see a price like break that, you're like, all right, that like this example right here, you're like,
Yeah,
that's
this one right here.
bullish.
So you see this entire sequence here that we analyzed about wanting the bullish bias all originated from this, which took out a point of invalidation, which invalidated the bearish bias.
Yeah.
Right.
But
and
if price came, if price came in like a liquidity grabbed that invalidation point, would that be considered like a break of it? Like it's not valid anymore?
No. Remember what I just said? We're in a bearish market.
Yeah.
Oh, well, it's also the inverse too. Even if we have a liquidity grab in one direction, right? That's not enough information, enough data.
Yeah, that's what I was getting at. Because
so like, don't get too caught up with them. You know.
All right.
Always focus on your structure because it's I don't have an example off the top of my head because that's a very specific scenario. Don't see one anywhere on here. I think this one's a good example. Hold on. Do you remember this? Do you remember the flash crash last year? 2019?
Yeah.
Right? Liquidity grab, massive liquidity grab, flash crash. But what happened? Structure was maintained. Right? liquidity grab, I guess, there. If that even reached, hold on.
But it doesn't like affect your bias.
No, it used to. And this was actually the scenario that kind of changed my mind. This is why it's the one that's on the top of my head. Structure never broke. Right, because you have to remember too, right? Liquidity grabs leave a low, leave a high, meaning that if they don't take if they don't take structure, then this is now liquidity. Why? Because structural continuations.
Yeah, that makes sense.
Yes, this is actually what changed my mind on that.
So it's all about the reaction.
Mm-hmm.
Okay, got it. Thanks.
Follow throughs, not even reactions. Follow throughs. Reactions are what causes the pullbacks.
Yeah.
Right.
Yeah, I just
Follow-throughs
get
meaning we take structure.
I get confused sometimes because I'll see like the liquidity grab and I'll see it will break like a intraday structure, and then I'm like, all right, I kind of got a bullish bias, but then I'm not taking into consideration the swing structure. You know what I mean?
Did you watch Wednesday's Zoom?
Yeah, I watched all of them.
Did you see how I color code my structure points?
Yeah.
Try
like
that.
the different.
Yeah, try
okay.
that.
Yeah.
Try that. Doesn't matter what colors, just color code them and remember what they mean.
Okay. But like mindset wise, when you have like, are you always like bearish?
Yes, I forced myself to be now. Yeah, because I used to be in the mindset where liquidity grab, right? I'm trying to catch the mitigation here and then catch the fat move, right? That's not only greedy, right? But it's only trying to be pretty, trying to catch the perfect entry. You know what I'm saying?
The reversal, man.
The reversals. Yeah, so no. Not anymore. I used to always want to find the reversals. Now I'm just continuations. There's more longevity to it.
Yeah, I got it. Thanks.
Cool. Anybody else? Go back to EG. Anybody else have any questions? How was everybody's Thanksgiving? No, Raj, cool. You don't look at GU no more? No, bro, I told you, like, there's like a set of pairs that I look at, but I only look at 2 at a time. Right, that's just a me thing. That's not really a rule, that's just a me thing. I can't focus on too many pairs. Oops. Let's see gold in your watch list. Yeah, gold. All right, 1 sec. Gold. Yeah, I was looking at it. Honestly, I was wanting to find a buy somewhere. This isn't a trade. I mean, a pair I mainly trade just because it's so weird. It likes to operate on different times of day at times. Right, 2 a.m., 2 a.m., 8 a.m. Right, but there was actually a very good setup on that I didn't see until I believe yesterday. Let's see. All right, so before that. This was needed. This was needed. Very needed. Right? This entire corrective move was very needed. Why? Oh, this fib is going to look so ugly. I haven't even looked at a fib. Well, we'll just eyeball this. Right? This was the last mitigation, liquidity grab, whatever. Right? Then this was the last mitigation, which created this entire move up. Right? But this is so overextended, and we even took all-time highs. Took all-time highs. Right, so we've cleared liquidity, and we've had a very overextended impulse. Right, we need a correction. Right, so we're not even close to the we're not even close to the pretty much main points there, or equilibrium even. Right, preferably good areas to watch. I don't know if we'll reach this deep. I don't think we'll reach this deep. If we reach this deep, then I can see a bearish market starting to pretty much happen. But I was wanting to find something here. Right, I was wanting to find something here. Don't remember exactly what point. Don't remember exact the point, but I'm just gonna highlight the entire range. Right, because I needed a good reason to want to risk. Right, because even though this is corrective, this is heavily bearish. Right, so if you look at the reaction, here, right, we're in this range here, right? So even though we had bullish breakthrough structures here, those are just needed for pullbacks. Remember that. So we had a consistent a consistent amount of pretty much bullish higher lows, right? Until here, could say liquidity grab, breaker structure, whatever. But after that, we had this break here, right? Then we had this break there, break there. We return to premium. I swear I saw somebody catch this. I guess this is another example for you, Lewis. Right, liquidity grab, but it still continued. Right, there you go.
Yeah. Yo, Fredo, you know how you draw turbulence points on your last chart, or one of the last charts?
That would have been, yeah, I guess that would have been here.
Yeah, like you consider that's like important structure, right?
Yeah, no, not necessarily structure, more so money. Because money was needed. Since we stalled, money was needed to then continue. Right, so there's two things that can happen. We can mitigate anything in that range, or we could take the liquidity and then mitigate that and then go. So those are typically two scenarios. But the thing is that there's so many that you have to reference all time frames to find proper ones. I guess it just helps you find POIs, if that makes sense.
Yeah.
Because from H4 that would have been one, but then from like the overall scale, this would have been one. Right, but also keep in mind that since you're trying to do this, just keep in mind you're trying to pick a low. Even though you're in bullish overall structure, you're still trying to pick a low. So I'd rather want to let it bottom out, give me structure break, or give me something to want to, get into that bullish bias.
Would intraday structure break be enough, or would you need like a?
If it reacts from somewhere.
Okay.
Has to react from somewhere.
Like if it reacted off that turbulence point you marked.
Yeah. Like for example, I was waiting here. I would have wanted something like this. Let's say we're in here, right? We come back. I would have wanted to see continuation of structure, a full structure break there, and another structure break there, so we now have a range to play under. Right, but this would have needed to, these pretty much pushes cannot mitigate from ideal areas onto the left.
Like those two turbulence points on the left, right there.
Or not even, just whatever POIs, inefficiencies, SCs. because I'm talking about this entire range here. This is what I would have wanted to see.
Yeah. But there would have been
and
a possibility, like, if I was looking at this, I would have to be aware of those two turbulence points right there on your screen on the left. You see them?
I would have just, I don't even see these as turbulence points. You see how you see how this one actually looks like a range? Just reference them as reaccumulation, redistribution.
Okay.
Like this here. But don't worry, I'm going to talk about that. Don't worry.
All right.
Yeah, like here. You see there was a range there.
Mm-hmm.
All right, this would be another one too. It's going to be interesting to see, right, what happens next week, because if we immediately come back into the range, right, this could have been a liquidity grab on like the daily.
Yeah.
So it's kind of weird, but right now I'm not touching it. Not touching it at all.
Yeah.
Who knows? We could even see a structure break here, meaning something mitigated probably here.
Mm-hmm.
Doubt it. Maybe. But yeah, even if we get the structure break here, though, keep in mind these are your full legs. Alright, so could even see something like that. It's just keep in mind that we're heavily bearish.
I mean, if you did like catch that buy and it did go up, would you also be looking for sell hedges just to like cover yourself?
Yeah, 100%. Yeah, management.
Yeah.
Yeah, being dynamic. Remember. But yeah, I think we're good for today. 40-minute call. Do you guys have any more questions? Can we take in consideration being inefficient above? Yeah. The only issue though with this inefficiency, I would have wanted this like overall inefficiency. I would have wanted it to be filled right after the low. Why? Because this is considered the pullback. Whoa, shut up. Right, this is considered the pullback, which then creates a new leg down, meaning I want to play in this range. Right, I want to continue this. I want to continue the intraday legs as much as I can. Right, because even if we break an intraday high, we could start a swing pullback, but it now becomes a tricky situation. And you'll see it once you see it in real time. Right, a good example is that EG, is what happens after the structure breaks. That is the key. What happens after structure breaks? What happens after points of invalidation? Structure points are no longer invalid. See what happens then. That's what matters. Right, and notice they all reference to allowing price to create a new structural range inside of whatever break already happened. Right. So does that make sense? Cool. Any more questions, or are we good there, guys? Hopefully you guys enjoyed the EU breakdown, the other one too, the NU breakdown. Yeah, Saturday is like, I don't have anything to do. I might start making them this early so I can have more time to actually speak. Because like, for example, now I can easily go to the gym now. But yeah, I guess we can end it off there.